Bruxelles, je t'aime, Bruxelles, je t'aime. Tu m'as fait manquer, Bruxelles, je t'aime, Bruxelles, je t'aime. T'es ma préférée, Bruxelles, je t'aime, Bruxelles, je t'aime.
Hello and welcome to Bruxelles, je t'aime, Euro News' talk show all about the European capital of Brussels. On Brussels, my love, we break down some of the big stories of the week, examine what's at stake for you and for Europe. My name is Maeve McMahon. Thanks for joining us. Coming up this week, from the failure of Silicon Valley Bank to the collapse of Credit Suisse, we take a look at how these financial shakes and the global market anxiety will impact Europe. For the time being, the European Central Bank chief is sounding calm, but investors and consumers around the continent are put out. So we're asking if we're heading for another financial crisis or if our banks are more stable than in the past. And as EU heads of state and government met in Brussels earlier this week to discuss the ongoing war in Ukraine and major geopolitical threats, the Chinese president was celebrating his 3-day trip to Moscow. With allegations that China is supplying the Russian president with lethal weapons, we're asking how threatening this bromance is to European security. To discuss all this and much more, we're joined here in our studio by the MEP Philippe Lambert from Belgium, President of the Greens. Good to see you.
Pleased to be here.
And the MEP Andrej Kovačič from Renew Europe. Good to see you.
Thank you for the
From
invitation.
Czechia.
Hello.
Great to have you on the show. And we're also joined by Jacob Funk-Kierkegaard, a senior fellow at the German Marshall Fund.
My pleasure to be here.
Nice to see you all. And before we hear your thoughts, let's just hear what's at stake. Christopher Pitchers reports.
Are we witnessing the beginning of another banking crisis? It's been the question on many people's lips as millions have watched on anxiously following the collapse of America's Silicon Valley Bank and the ensuing fallout in Switzerland. The US lender, which is the biggest bank to fail since the 2008 financial crisis, went bust earlier this month after clients rushed to withdraw their money from it over concerns about its stability. This caused jitters in the markets that spread rapidly throughout the world, including Europe. Investment bank Credit Suisse has so far been the most high-profile casualty after its own stability also came into question. The Swiss government has since attempted to calm markets, essentially forcing rival bank UBS to buy Credit Suisse for an undervalued 3 billion euros. Central banks, however, say they're confident a contagion effect won't take hold and have put measures in place to ensure stability. But like most things in the financial sector, confidence is key. And if investor faith continues to plummet, all bets for what happens next could be off.
So Christopher Pitchers reporting there on a story, gentlemen, I'm sure you're very familiar with. But in case our viewers are not and they're wondering what's at stake for them, how big a deal is it? And for Europe, what would you say, Philippe Lambert?
Well, I wouldn't be too worried in the sense that Credit Suisse has been almost a zombie bank mired in scandal and in poor decision-making over the last few years. So I'm not surprised that the current bout of uncertainty has pulled it off the cliff. I think that one investor made stupid statements as well. And, you know, confidence is key because the entire financial system, is built on trust and confidence. And if you lose it, well, basically you're out of business. Now, is that the case of the entire European financial sector? I wouldn't say so. At least that is not my perception. Now, we have been for a decade in a period of easy money. Mm-hmm. The question is, if all the investments that have been made with that money have been sound investments, this we don't know. Okay. Probably that.
Let's just hear now from Mr. Kovac. Your reaction to that?
I share the view that if you are a depositor in the European Union bank, that you should not be worried about your deposits. I think the regulatory framework in Europe when it comes to banking sector has been very much improved since the latest crisis in 2008, 2009. There has been a lot of new elements of, including on the EU level, of regulatory framework that was put on the European banks, a lot of stress testing as well. But obviously what we saw, there was a secondary effect, indirect effect on the European more sentiment when it comes to feeling of investors, how they should not now assess the future strategies. But I think the key is actually say that the European Union should now be well protected and well guaranteed in terms of
So the European Union is well protected. What about you? What's your take?
No, I think that's true. I mean, I think if you look at the idiosyncratic issues on Silicon Valley Bank, you basically have a bank that caters largely to the tech community in Silicon Valley. It means that it is financed by a lot of people, investors that put a lot of money in that bank, way above the insured deposit level. And this bank put all that money into government bonds. Well, interest rates go up, the value of these bonds go down. So they had a problem. Eventually, and this was a huge supervisory failure by the Federal Reserve, there's no doubt about that. Suddenly some of these big investors or big depositors finds out, wait a minute, we have a problem in the bank. They literally go on Twitter and you have a run on the bank.
Yeah.
It happens so fast.
It happens, literally, it goes very fast, but is that credible in Europe? I don't think so, because we are quote unquote used to having volatility in bond yields here. So usually it's hedged. So I don't think it's a big issue.
Well, we wanted to get the view as well from outside Brussels. So our Paul Larocque-Hoppeneau spoke to Nicolas Bouzot. He's the well-known French liberal economist, also following this story very carefully. Take a listen.
The stock value of Credit Suisse has fallen last week, and it has triggered some worrying of investor and of depositors. The European banking system is quite solid, is very regulated. The regulations are very strict. People have to keep their money in the European banking system. The deposits are insured. Your saving is not in danger at all.
So Nicolas Bouzot there, the French economist, saying your savings are okay. So why was there so much drama then? I mean, it seems everyone's sounding calm.
I mean, I think, as Philippe already said, Credit Suisse was a dead body walking for a long time that clearly, in my opinion, benefited from sort of these Swiss supervisors looking the other way. Because there is a very, very long list spanning drug dealing, corruption in emerging markets, lack of management rigor, lack of counterparty. I mean, they lost a lot of money. If Credit Suisse had not been such a big bank in Switzerland, they would probably have been taken over by others a long time ago or shut down. Now you had this combination of jitters in the American banking system, and as Philippe said, you had the biggest shareholder in Credit Suisse saying, we are absolutely not going to put more money into this bank, which of course markets immediately realize, oh, there's something wrong, so they're selling, right? And then you have the Swiss government trying to engineer this takeover by UBS, where clearly, in my opinion, they did not wipe out all the shareholders because they wanted to protect some of the value of the strategic shareholders, including some of the shareholders from the Gulf region, Saudi Arabia, Qatar, that are also shareholders in UBS. But what they did do was that they wiped out a particular asset class of hybrid bonds before they wiped out the shareholders, which goes completely against all the international agreements that we had after the global financial crisis. So
Philippe Lambert?
I hope if something likewise happens in Europe, I hope that we are going to stick to the hierarchy. That is, shareholders are the ones most exposed and they should be wiped out before we start wiping out, bailing in basically other kinds of investors who are bondholders, and there they did it the other way around. And that is changing the rules on the fly is not something that creates a lot of confidence. That's one aspect. And the other aspect I would say is that this thing that happened in Switzerland reminds Europeans that we have yet to complete the banking union. No, we do not have a European deposit insurance fund, and our European banking resolution scheme has been already bent a bit in some Italian cases where actually the rules for banking resolution have not been entirely respected. And to me, it should remind us of the urge of completing the banking union.
And just a reminder of viewers about this depository insurance scheme. We've been talking about it for years since the Lehman Brothers. Just perhaps contextualise it for our viewers. It's to impact those who have savings of more than 100,000 euros, right?
Yes, indeed. I would like to also emphasize that the fact that there is still insurance guarantee for deposits to 100,000 euros for European depositors. That is in place. So people should not be afraid of their deposits in this regard. But yeah, obviously, I mean, in terms of completing banking union, which is still an ongoing construction in Europe, there are elements where specifically member states are not able to find a common language. The EDIS is one of them. Specifically, some countries and some banks in some countries are afraid that they will be liable for poorer performance of banks in other countries. But I think the key is actually to find a balance and move this discussion forward, because definitely there may be events where such an issue may be, such an instrument may be needed.
And just remind Jacob, our viewers, why it's not moving forward faster, this banking union, and what exactly it is.
Well, I mean, it's basically, as Andre said, there are some who are afraid that they're going to be paying for other people's banks, which is basically a way of expressing, sort of a lack of confidence that the actual bail-in process system actually will be implemented. Because if that's the case, if you actually go through the hierarchy of creditors in a failing bank, the probability that you will actually end up needing to bail in depositors and call upon the deposit insurance guarantee is extraordinarily low. I mean, if you had the system in place that we have now in 2008, the only bank in which this might have been possible was Allied Irish Bank in Ireland, which obviously was a particularly egregious case of mismanagement. So basically, it's some banks basically saying we don't trust the system.
Yeah. Correct.
Well, it certainly makes us think a lot of the past, doesn't it, this story? And in fact, it came up this week when EU heads of state and government were in Brussels. They met for 2 days for an EU summit. And chairing that meeting was, of course, Charles Michel, the president of the EU Council. And our FE, Kutsa Costa, had the opportunity to ask him if he was worried about this Credit Suisse banking turmoil. Take a listen.
I'm confident because you know that the last years we worked a lot with the European experts and we all the European bodies in order to strengthen our financial system on the EU side. But we are monitoring what's happening in Switzerland, in the United States. But I'm confident that we have the right tools in order to make sure that we keep a stable situation.
So the president of the EU Council there saying that he's confident we have the right tools. Would you agree with him?
I think that's basically the lines that they were taking. But on top of what we were discussing, for instance, for the EDIS and lacking elements of the banking union, I think there's one more important thing that we need to mention, and that's enforcement of the existing rules. Because we may have very good regulatory framework, and I believe in many areas we have very good regulatory framework, but we need to make sure that the supervisors, the regulators, are enforcing this regulatory framework properly, so that there are no cases like Philip mentioned, for instance, in Italian case or other case, because this is actually the key to maintain the trust and the confidence in the European banking sector.
But for that to become a reality, you would obviously need the backing of EU member states as well.
Yeah, and well, oftentimes governments have been turning a blind eye They didn't really want to take a hard look at their banks because they also feel that they depend from their banks and they want to preserve their national champions, quote unquote. And this is where having a European supervision helps a bit because it separates a bit the sort of, unhealthy relationship that you have between governments and their big banks. And I'm not entirely sure that we've gotten there yet, because when I look at the quality of the stress testing that is being done, sometimes I find that we are not harsh enough in testing really extreme scenarios, because what we have learned over the past few years, that extreme scenarios may actually happen. And therefore, we better be prepared. And there, I would like the European supervision to be tougher on making sure that indeed the system is rock solid, because that's what we need. Climate change will be one major category of impacts, but also now we have war on our doorstep and a massive economic realignment that has implications. Well, I'd like this kind of scenario to be stress tested.
The European Central Bank are playing a big role, of course, of late as well in all this, and central banks across Europe. And this week we did see the chief of the ECB, Christine Lagarde, come to Brussels and reassure MEPs and tell them that the euro area banking sector is resilient with strong capital positions and that Switzerland does not set the standards in Europe. And Jacob, we saw as well just last week the ECB increased interest rates by 0.5 percentage point, underlining its promise to fight high inflation across the Eurozone. What's your reaction on that?
I think it was the right thing to do. I think inflation is clearly high in Europe. They need to act to bring that down. And I basically share Christine Lagarde's view that the exposure of European banks to financial instability from higher interest rates is not a real issue, in the same way that it in many ways is an issue for some banks in the United States, that if you Federal Reserve in the US kept raising interest rates at the speed they were doing, you would have probably more banks come into trouble, which is also why you saw at the latest Federal Reserve Bank meeting, they did not raise by 50 basis points, but only 25. So there is a trade-off in some jurisdictions between the level of how high you go with your interest rates and the sort of level of financial instability or uncertainty in financial market. It works both of them works to reduce economic activity and bring down inflation.
Well, just on inflation, which is, as you said, decreasing slowly but surely, we can show you the figures there, because last October 2022 in the Eurozone it was 10.6% and it lowered to 8.5% in February in 2023. So are you optimistic, I think, about the way it's going? I mean, it's still quite slow.
Yeah, and I do believe that a significant part of the inflation that we are seeing have a little to do with the conflict, so with a special event, but also more with the fundamentals of how the world economy is functioning, because now we are starting to hit limits. Well, climate is one, but that's maybe not the one that bites more, but limits in terms of availability of resources. And that is a fundamental push for inflation, because of course if resources are scarce, prices go up, and that is not something that is going to disappear anytime soon, and especially when this is combined with a sort of fragmentation of the globalization, that of course generates its cost impact as well. Because obviously, if we had such a degree of globalization, it was because it was economically efficient to do so. So if you have fragmentation, it goes the other way. So these factors are not going to disappear anytime soon. So we will need indeed to have monetary policy action to counter that, but we also have to rethink the way our economies work, maybe to become a bit more frugal in terms of how we manage energy and resources. And this is good about the European reaction to the war in Ukraine. It was not only about renewables, efficiency, but also how can we actually not spend energy, not waste energy, and reduce our consumption. That can bring inflation down as well.
Time to become a little bit more frugal, perhaps. We've been spending and going way beyond our means for many years, perhaps. But I just want to show you as well the figures across Europe when it comes to inflation, because Hungary, 25.8%, Latvia, 20.1%, and your own country, Czechia, 18.4%. That's massive, impacting, I'm sure, very gravely the people of Czechia.
It is actually. This is what I wanted to mention in this regard. Maybe we can see positive trends in, slowing the pace of the increase of prices, but we still have countries with very high inflation. But we should also not to forget that the ECB inflation target is around 2%. So even if we still have 8, 9, 10%, it is extremely high, and this is actually a systemic risk for economy. So we need to do a lot actually to counter that. And this is only aggregation of numbers. If you break it down, you see that there are categories of products and services that are actually growing in terms of consumer price much higher. We speak about food, we speak about energy. It has asymmetric impact on various groups of population, and this is exactly what we should also take into consideration when opting for different instruments how to tackle inflation.
And there's the issue of shrinkflation as well, which we've reported on as well. But just very briefly, because we're nearly running out of time, Jacob, I mean, this is obviously killing the purchasing power of people across the continent, especially in Hungary, Czechia and Latvia. And what is the impact really of this inflation having on the state of the European economy?
Well, I think, basically we should, a lot of it has to do with the energy price shock. That not only, as was mentioned by Andre, obviously pushes up some categories, but basically every category across the supply chain in Europe, they need to pay their heating bills, they need to pay their electricity, so they will have to raise prices. But these energy prices in Europe have come down a lot. Food prices have actually come down a lot. Maybe not at the retail level, but if you look at the wholesale level, they have actually come down. So I'm actually quite optimistic that inflation will come down.
Thank you so much for your insights, and stay with us, because after the break we'll be asking if the Chinese president's trip to Moscow has been keeping people here in Brussels awake at night. See you soon here on Euronews and Euronews.com. Welcome back to Brussels, my love. With me, Maeve McMahon, where we're taking a little look back at some of the stories unfolding across the continent this week. Well, one major image, in fact, that struck many here in Europe this week was the image of the Chinese president in Moscow. During his visit, Xi discussed his 12-point peace plan and his, quote, impartial position. His plane then left Moscow after being seen off by a guard of honour who played the Russian and the Chinese national anthems. So I'd like to ask the panel, what did you think of the visit? Is it a major blow to the West? Andrew, we'll start with you.
I think it mainly demonstrates the specific position that China is vis-à-vis the conflict. Obviously, it can be used by Russian administration, Russian propaganda as sort of a reinforcement of alliance between Russia and China. But I think the Chinese president went to Moscow to reinforce his pure own interest, be it politic, be it geopolitic, strategic, and economic. And I think this is what we see since the very beginning of this war. China playing very, very strange role, not really supporting, but supporting Russia, not really rejecting, but sometimes going in this direction against the aggression in Ukraine. And I'm afraid that the only country that may benefit out of it can be China if we actually don't manage the risk.
So he doesn't
properly.
care about anyone except himself.
Well, frankly speaking, this is the rule of the game. I mean, jurisdictions, states take care of their own interests, and there's nothing wrong with that. But when you come to think about the 50s and 60s, where China was seen as a satellite of Russia, now it's a complete other way around. I mean, now Russia has become de facto totally dependent on China. When they had their special relationship with Europe in terms of energy supplies, raw material supplies, they could say, well, our economy is not entirely dependent on China. They could play one against the other. This is gone. Now they have only one way, and that is China. And who dictates? It's China. It's not Russia.
And this alliance of autocracies keeping people up here in Brussels awake at night, I mean, it's threatening.
No, I don't think it is. I mean, there's nothing new in it. Russia, as Philippe says, is China's lapdog now. I mean, they have no choice. By the way, I don't think in some ways it's good, because I think the Chinese have very clearly said no nuclear threats. Putin will have to adhere to that. But China isn't going, in my opinion, to give Putin a lot of weapons that might influence the conduct of the war, partly because if he does so, Europe will sanction him in the same way as the United States does. But I actually think the biggest thing that happened with this meeting was that the Japanese Prime Minister made a surprise visit to Kiev at the same time, clearly sending a signal not just to Europe, but to all of Asia, we are on the other side of this conflict. And that matters because he's the G7 chair today, so Ukraine is going to go there as well. So, no, there are fronts of, conflict lines are being drawn also in Asia as we speak.
Yeah, the timing was very, very apt indeed. But also this week we saw the Secretary General of NATO, Jens Stoltenberg, presenting his annual review to the press. And he was, of course, asked about this trip. And he said, just like you, Jacob, that he was not surprised, that he knew both men had a similar worldview and both embraced a multipolar world. Take a listen now to Jens Stoltenberg.
The meeting that takes place in Moscow is part of a pattern we have seen over the last years, where China and Russia are coming closer and closer. A few weeks before the invasion last February, President Xi and President Putin met in Beijing, where they signed a joint declaration promising each other a partnership without any limits. And we see how China and Russia are coming closer and closer in the military domain, in the economic domain, and also in the political and diplomatic domain.
Jens Stoltenberg there, the Secretary General of NATO. Quick reaction to that?
I think it follows the line that we mentioned. I'm not really sure if this is a really like a political alliance. I still believe that there is a lot of that China is actually looking for in terms of their own interest. But I think it is also it shows that the geopolitics globally has shifted. I mean, we saw the U.S. being occupied by Asia and China in the first place for a couple of years now, and I think we all see that if there is a possible systemic threat to security or geopolitical stability in the world, that may be China.
And Philippe Lambert, in your opinion, what should Europe's stance vis-à-vis China?
Well, there I would advocate that indeed, well, we are part of the Western alliance, obviously, but we should not let our China policy be dictated by Washington. I would really urge the European Union to look after its own interest. Now, we have seen what hyperdependency from Russia meant to us, to our strategic autonomy, and in a way, and I would say especially when I look at the German mercantilism, we are over-dependent on China as well. But that doesn't mean that you have to go the entire to the extreme other end by saying, okay, we cut all ties. We have to find the right balance, and the right balance is for us to choose and not for anyone else.
Jacob, valid point there being made by Philippe Lambert. I mean, for years the EU has kind of trotted out the same line as Washington DC, but a little bit in the behind the scenes when it comes to foreign policy.
No, I mean, look, Europe needs to find its own positions and defend them, absolutely. And they are not aligned everywhere with the United States. They are in some locations, for sure, but not everywhere. And Europe needs to have, I think, a multifaceted relationship with China. We have, right now, I mean, clearly the green transition is Europe's strategic, economic, political goal. Can we achieve that without buying 95% of our solar panels from China? I am personally very skeptical about that, but I don't think that necessarily is a problem with that. But that's a political. Those are the kinds of political trade-offs that Europe needs to make without looking at Washington. We need to basically make up what our own strategic interests are.
Final word with yourself, Andres?
Definitely, we also have to see that this the relation is not one-sided. The part of economic strength of China is actually linked to the fact that they export to Europe, and I think this is a factor that needs to be taken into consideration on both sides. If China stops developing the economic ties with Europe, they will definitely weaken their economic performance, and the same from the European side. But we have to be also vocal on other issues. There's definitely a problem with human rights in China. There's definitely a political problem in the way the country is governed. So I think this is something that we need to always put high on our agenda.
I think Andre's point is key, because if from China's perspective, if you're locked in a rivalry with the United States, Europe is the key chess piece on the board. And
Europe's the key chess board.
You cannot just ignore it.
We'll have to stop you there. Thank you so much, gentlemen, and thank you for watching. And we'll see you soon here on Euronews and Euronews.com. Welcome back to Brussels, my love, with me, Maeve McMahon, where we're taking a look back at some European stories that turned our heads this week. Well, one story that didn't exactly hit the headlines was news about whether or not EU staffers should be allowed to bring their pet to work. While the Commission is still contemplating, it does raise a wider question about the mental health of all desk-based workers and whether or not a furry friend could cheer people up. Let's take a look at the letter that the EU Commissioner Hahn sent over to MEPs. He said the Commission is, quote, exploring pet-related presence and will organise pilot actions where staff could bring their pets. A legal framework as well would need to be adapted. So my question to the panel is this a waste of Commissioner Hahn's time when we've got so many crises in the world, or is it a legitimate point? Could it help people's mental health?
Well, in my view, total waste of time. Sorry about this. I won't be popular, but frankly speaking, first, I'm not sure that pets have a place in human buildings, but, well, that's my personal preference. But I can tell you, I cannot imagine pets running around in the corridors of the European institutions. Come on. I mean, are we talking serious business?
This is serious business. This is a letter that Johannes Hahn, the Budget Commissioner, wrote. Jacob, what's your take?
I completely agree. I think it is a total egregious expansion of an attempt to try to take things that are unrelated to your work as part of workers' rights. I think it's complete nonsense, and it doesn't actually think about that. It's one person's pet is another person's pest. They may be allergic to the dog or the cat or whatever. No, sure. I mean it's just basically selfishness of a small group of people.
I'm sure a lot of our viewers are dog lovers and cat lovers and would disagree. But Andres, what about you? Whose side are you on?
Well, I would say that it's more as a joke. We are used to in European institutions to some animals, right? We often mention this elephant in the room when we discuss difficult issues. But to be honest, I'm also smiling. If this is the real concern of the European Commission, then it seems that we are done with serious issues and we can afford it. I understand that it's something like for friendly environment, but we also have to see that, for instance, after the pandemic, the Commission has switched to a hybrid regime. There's not a lot of people going on daily basis to their offices because they have these options of teleworking. It is also in other institutions. It is also in other organizations. So I think these would be maybe the benefits that the Commission should look into more.
Well, it would certainly make a good headline, wouldn't it? But I mean, the reality is, and the serious note is, that according to a European Working Conditions survey, 1 in 4 workers say that their work had a negative impact on their mental health. So I guess the argument is that there's a major mental health problem with people sitting at their desks all day staring at a computer.
But what is behind that? Come on. I mean, we have to look at what is behind that. It can be quality of management, it can be workload, it can be cramped offices. But don't tell me, this I really won't buy, that what will solve the mental health problems will be taking your pet along with you. Come on.
But the future of work will dramatically change.
But what about if you don't have? What about if you're unemployed? What about the negative impact on mental health being unemployed, having a much lower income? That has a mass. I mean, anyway, I think it's.
But this is specifically regarding people in offices, in cramped spaces, sitting at desks all day long.
I think we should more focus on managing the stress level and whether there are things that we can actually do in terms of the overall context of environment.
Look, if you want to reduce stress levels in general, turn off your bloody iPhone. I'm sorry, but I mean there are so many moving parts. In this post-pandemic world. Then, as Philip says, will it solve it to bring a pet?
No.
I mean, I'm sorry. It's completely misguided.
Well, colleagues from the Greens actually signed up to this letter.
Well, they can. They can, but I won't. I can tell you that.
But I can't imagine, Andre, this will go very far. I mean, as we saw there will be a legal framework explored, but I imagine this won't go very far in the EU machinery.
I don't know exactly what kind of legal framework we need for that. I understand this pilot action. This is how the Commission usually tests new things.
And we'll report on that pilot action when it happens. Yeah. But for now, that's all I'm afraid we have time for. Thank you so much for your insights.
Pleasure.
And thank you for watching. See you soon here on Euronews.